Hey everybody, Scott Bonovich, Mortgage Nerds here in Appleton.
Jake Knuppel, Mortgage Nerds in Appleton.
All right, Jake, so I'm a home buyer, first-time home buyer. I want to buy a house, get pre-approved. Somebody gives me your number. I give you a call. What's, outside of taking an application, what is probably the number one determining factor on my ability to either get approved and what loan programs I'm going to be approved for?
Without a doubt, credit. It's the most important thing when we do right away. We gotta see what's out there. Credit. Right. What debts are out there, what liabilities, all that good stuff.
So the credit, the points of the scoring system matters because there's different, there's minimum FICO score requirements.
Different loan programs. Yep.
And then the credit profile makes a difference because you might have a good credit score, but it's based on one account with 8 months of
length of trade history at that point too.
So what's interesting is, and I think it's a big misstep, and a lot of lenders, I think a lot of lenders just do this because it's not like they're telling the client that maybe they don't meet the minimum FICO score requirements, and so it's not like they're misleading them. Mm-hmm. But I think the problem is, and it's interesting because when there's so much emphasis placed on that credit score and what you can qualify for and so forth, but yet the credit bureaus themselves, statistically, they come out with this, and they admit that at least 40% of credit scores have inaccurate information on them. That's like,
it's a big number.
It's mind-blowing to me,
Right.
When there's so much emphasis placed on that score, the fact that, the bureaus themselves will admit that there's 40%. Now, and again, guys, it's not to say that it's fraud necessarily, but what it is they all update on
different times of the month. Mm-hmm. Really, and they have their own algorithms and stuff like that, but one credit card may report on the first of the month, your next one may report on the 22nd.
Yep.
Right, so then that's giving not false information, it's just giving what is accurately reporting at that time that we pull credit.
It's giving you a score based on what they have,
Today's
right on
date.
that, right on that form.
And credit is always evolving, right? Minute by minute, day by day.
Yep.
It is always getting better. As long as you keep making your payments, doing everything, it's only ever evolving at that point.
So I think what we do a really good job here in our office is actually going through that credit report line by line, because we do realize that it could be 20 points, 5 points could be the difference between somebody qualifying now or not qualifying. 20 points might be the difference, or 10 points, whatever, might be the difference between this rate and that rate. PMI higher or lower.
Yep.
All of those things. So with that being said, obviously when you go through that credit report and you're talking with that client, I'm always making notes. Hey, there was a $1,000 balance or $1,010 balance on a $1,000 limit.
Yep.
What is that going to do to somebody's score?
Not good.
No, so it hurts you almost as bad as a collection if you're over your limit. The beauty of that is that that's a simple fix. You can pay it down.
Or maybe they already have paid it down at that point, and then now the balance is inaccurate at that point. So you might have a $1,010 balance, quote unquote, on the credit report, but you're telling us, well, no, I just made a payment. Now it's only $700, right? So that's not reporting, as accurate as possible.
So you're going to tell that in that situation, you're going to tell that client, listen, we need to catch up to the real numbers here. So in other words, you made that payment, great. Don't use this card. Don't use this other card and this card over here too. So we're going to wait until we know that one updates. Maybe it's 2 weeks, maybe it's a week, whatever it may be. Hit a reset, contact the bureaus, reset it, re-pull it, and now it could be 30 points, 40 points, 50 points difference. So it literally takes you maybe from can't get an approval right now to I can get an approval, or can't get this rate, now I can get this rate.
And we have some cool programs too that we can actually do what-if simulations where we can kind of simulate what your balance, if it goes down to this amount, maybe it jumps your score 20 points, maybe it's 40 points, like you said, in 1 month time span. So we can kind of help out with that process if that's something that would interest you.
Yeah, and it's not like throwing darts at the wall. It's actually pretty precise.
It's pretty accurate.
It's very, it's built by the credit bureaus themselves, so it's reading its own information. So that, I think, again, goes back to, like I say, I think it's a misstep that a lot of people, kind of, or lenders, I should say, even banks, credit unions, lenders, they just don't go through it line by line by line.
Yeah.
And if you do, you may find out that obviously that person's in a position, sooner than later, maybe,
Yep.
or even right now, just because the information isn't accurate. So, credit is obviously complex, and
Super complex. I mean, there's not enough that we can go through to
in
really
this segment,
right to really go over everything. But the big thing is contact us. Let's go through it line by line. Let's see what's out there. Kind of let's see where everything's at that point.
Yep, we'll map it out, give you a game plan, and again, it'll put you in a better position to qualify right now. So again, as always, mortgages are complex.
Let mortgage nerds give you the answers you need.